Hi guys, and welcome to another a video on Down to Business. It's a series we've put together that we've been interviewing a lot of the key disciplines business owners need to pay attention to, and people that are specialists in their field around these disciplines to help you at the end of the day. And today we've got a topic everyone loves to talk about, and everyone's got an opinion, being tax. Tax in Australia is can be a minefield. It's quite a high taxed country. And today I've got joining me Dan Velich from PKF, who's a tax specialist, and we'll get to what a specialist is a bit later. But I'll let Dan intro himself and tell us a bit about what he does.
Yeah, cheers, Beeks. Yeah, as you said, my name's Dan Velich. I'm a tax specialist at PKF here in Newcastle. I've got 10 years experience in the accounting industry, and throughout my time I've worked in Brisbane and also Newcastle, helping small businesses and other accounting firms with that high level tax advice.
So, Dan, tell me a bit more when you say about how you work with business owners. I mean, obviously I know Dan pretty well, but you don't have a lot of recurring clients, I guess. You're more that, as you said, high level. Let's talk about that with a business owner's perspective.
Yeah, exactly right. Our work's a bit different to, I suppose, the GP accountant who does a bit of everything. We're purely tax, so we specialise in tax, and the way we help other businesses is predominantly in one or two ways. Transactional support, so for businesses looking to buy another business, sell their business, buy a commercial property, protect their assets. That's the transactional support that we provide. And further to that, a tax review. So we come in and review their tax structures, I suppose, and make sure they're in line with their goals, and just make sure they're paying the minimum amount of tax. So they're the two ways that we service businesses.
I think that's key. Everyone remembers the famous Kerry Packer quote, talking about, I pay my taxes, but I'm not going to pay extra because, the government's not doing that well with it. Now, You've all got your views on that. We won't go down the political path, but I think the key thing with any tax, related issue and strategy, it's about, from a business point of view, retaining more money within the business to allow for growth, expansion, whether it be wealth creation, etc. But it's letting your money work for you in your control, and that's where tax minimisation comes into effect. Yeah,
exactly right. As you know, the famous saying, "Cash is king," and tax is a heavy part of that. So, look, if you can consult with a tax specialist or get the time to just put in a tax strategy or get some tax advice, it can pay massive dividends in the long run.
Yeah, sure. And I think the key thing is making sure you're dealing with people that are qualified. Like at the end of the day, just having an accountant or just having someone that says they know about tax or has a view of the world. I mean, the thing with Australia that I find, you'd find yourself, especially if you don't tell anyone what you do, you go to the barbecue or the pub and everyone's got an opinion and tells you what you should be doing from a tax point of view. It's like real estate. But, I think the key thing is it's such a convoluted, set of legislations that you need to make sure you understand what you can and can't do, because it doesn't take a lot to be caught out, and especially in the day, this day and age with so much, technology and data matching and that sort of thing from an ATO perspective.
Yeah, look, exactly right. It's getting quite scary what the ATO can get their hands on these days, and I think you nailed on the head there that it is quite important to make sure you get the correct advice, because it can pay off massively for business owners and also other accountants out there as well. They don't want to run the risk of a PI claim for incorrect tax advice that they give their clients.
Yeah, and we'll get to that too. But talk to me, a lot of people just think, oh, I've got an accountant. I get my tax done. It's a common thing we hear all the time. But for the layman, and to make this real pragmatic, describe, I guess, what you mean by tax strategy or tax advice that's another level than just getting your tax done.
Okay, look, getting your tax done, everyone does it. It's where you go to the accountant once a year, get your tax return and financial statements done.
It's lodgement, it's compliance.
Yeah. And you wipe your hands done. There's no strategy or advice about it. It's historical, it is what it is.
Tax. And to be honest, sorry to jump in, but most people I gather are doing that either to get something back in a refund or knowing what they've got to pay.
Yeah, exactly right. There's no, and as I said, there's no strategy or advice about it. And you look at the successful businesses out there, and what are they doing? They've got a business plan, they've got a business goal. Why not get some tax advice or some tax strategy? And that's essentially what it is. You're proactive. Advice is purely, mainly in relation to that transactional support. So if you're looking to buy a property, or you wanted some asset protection, or if you're selling your business, or if you want to pass the business on to your kids, that's where you'd seek a tax advisor out and get that advice to make sure that you're minimising your tax.
And you're doing it efficiently and effectively.
Yeah, exactly right. And tax strategy is more in relation to, okay, what's your overall group like, and how can we put in some strategies to minimise your tax over the group rather than just a specific transaction.
Yeah, I think that's important what you're saying. And right throughout this series, and I know you would have watched them all, Dan, but with all the videos, we've got the one common theme. I think it's give yourself time and have a plan. And tax is, you hear people complain about it all the time. You hear people, have an opinion on it all the time. Yet what are they proactively doing about it? And often there's a gap there.
Yeah, exactly right. Look, I get it. Business owners are flat out doing what they're doing, making money, managing people, and it's hard to find that time. But really, the way a tax specialist works is we come in, we assess the business, we provide some advice, and then the business owner can choose to implement those decisions. There's not much time to it, to be honest. We do most of the work. It's just getting that interview with the business owner or the accounting owner, and just to provide that high level technical advice that, as you said, that a lot of GP accountants out there might not have the time or resources to do that high level tax advice.
Yeah, I think I've got a couple of examples actually that I did my homework.
Yep.
I've got some couple of examples around one with and superannuation that comes into tax advice as well. Yes. A client that restructured, they retired, had a property in their own names, commercial property restructured, a bit of modelling, bit of tax advice and a strategy around it over a 10-year period. We only modelled over 10 years. If they held it longer, it'd be even more. But over a 10-year period, by following the advice for the restructure, we saved them over $1 million after costs in net position. So that's a pretty impressive result by actually having a plan in place. And I guess the other example is probably not so much on the proactive, but on the reactive, that we got referred a client that had advice and transacted on a particular, it was a property deal with another accountant, referred to one of your colleagues, obviously, Darren. He's had a look through it and gone, hang on, that's not correct. Gone back and done a fair bit of work. But again, the savings from that error was again in the vicinity of, not quite $1 million, but near enough to $1 million. So I guess for business owners, I always say it's not too late to look, backwards as well. But even better, have a plan and make sure that you have the right advice. And we've stressed that previously, that especially when you're dealing with specialists, they aren't your day-to-day accountants, and you really need to look and make sure you've got the right advice for the right task.
Yeah, exactly right. And I've got a matter going on at the moment where the client's selling their business, was incorrectly structured, the business deal. They came and consulted us. We were able to renegotiate that deal, and it's saved them $400,000 in tax.
We're talking some big dollars, and especially in the scheme of things of some of the videos we've run around, whether it be retirement planning in your instance, whether it be getting more money back in the business for growth, or even rewarding your own team. Like, that requires money.
Yes.
And we need to make sure, again, I'll reiterate, we're not avoiding tax, we're not paying our dues, but we're making sure that we're doing the right thing with the business owner.
Yeah, exactly right. And there's a couple of other points to the tax speciality that we offer, and that's also, as you briefly talking about there, succession planning, asset protection, wealth extraction. That's a one that people often miss. Wealth creation is always good, but how do you get that money out of the company? So wealth extraction is a good one.
Talk about that one bit.
Well, look, the common strategy out there is to implement what they call a bucket company. And look, they're well and good, but how do you get the money out of the company? If you get the money out of the company, there's always tax implications. So you can consult with...
To how to get back in the hands of the ultimate family or owners? Or...
Exactly right. Like, Beach, you know what business owners are like. they're good at what they're doing, but somehow they sometimes they use that company as their own personal bank and take funds out willy-nilly. But under the tax legislation, you can't do that. If the money comes out of the company, you've got to pay tax on it eventually. So that's where we can come in and look at some strategies how to get that money out of the company, i.e. wealth extraction. So
yeah, it's a good point.
Yep.
Yeah. Use that one. There you go. But I guess the other thing when I look at some of the things you guys get involved with, and I know I use these guys personally with my clients and my own positions, but things that we talk tax. It's not just getting your tax done, compliance tax. What are those areas that you're involved with? I mean, I know you said the transaction types in succession planning, etc., but the actual specifics. Talk a bit about that.
Yep. So look, we're an international organisation, so we've got resources in I think 151 countries, tax specialists in 151 countries. So we've got the capabilities to do any tax matter there is. So whether it's a small business matter, such as small business CGT concessions, stamp duty, land tax.
Small business CGT concessions?
Yes.
Sorry, I just want to pick on that one because it sounds like it's pretty common.
Yeah, look, it is. So the tax legislation in Australia offer small businesses, that is a group that turns over less than $2 million or has net assets less than $6 million, to potentially sell their business or sell an asset tax-free. So they're quite lucrative, but there was some changes back in 2018 that made the rules even more complex.
I was going to say, it sounds too good to be true.
Yeah, look, it is. They are very generous, but they are very complex, the rules. We commonly see matters come across our desk where clients are advised that they're eligible or they're not eligible, and that may not be the case. So it's an area where you certainly need a specialist in, but the results can pay dividends.
Yeah, the results sound awesome.
Yeah,
right. And so small business CGT concessions?
Yes.
What about that Division 7A thing we always hear about?
Yeah, look, this is what I was talking about before. If you operate as a company or you have a company to minimise your tax, getting that money out of the company is always an issue. And this is where Division 7A comes into play. Division 7A is all about the tax office trying to stop people drawing money out of the company tax-free. So back in the day, business owners would operate as a company and they'll just take the money out tax-free, and the ATO wouldn't get their taxes. So the ATO brought in this legislation called Division 7A, where essentially if you draw the money out of the company, you've got to take it out as wages or dividend, or it's got to be a Division 7A loan. And a Division 7A loan essentially is you've got 7 years to repay back that money to the company.
I've seen some interesting scenarios over the years too, where some of these things get put in by accountants. The business owner's not aware that they'll have a future tax issue, and then we're going to try and unwind it and fix it up, and it can be quite a nasty surprise. Yeah,
look, exactly right. You do see them, and it's just having that difficult conversation with the client. Like, look, this is what's going on. You got to pay this money back, and then look at, as I said before, cash is king to the client, and then they're stuck with this huge tax liability to manage this Division 7A liability that they weren't aware of. So it's always crucial to make sure you're aware of your Division 7A liability and manage that on a yearly basis, not just back end it to the end of the 7 or 10 year strategy that some accountants out there do.
Yeah. Some of the other areas, so we mentioned Division 7A, small business CGT concessions.
Yeah, look, staff retention is always a big one. So we do a lot of employee share schemes out there. We work with other accountants and businesses to implement employee share schemes. GST and property or property transactions in general, that's always a big one. Making sure the correct GST is paid.
I had one just the other day. I'll jump in there. Just good example. Clients done a residential flip.
Yes.
Well, not a flip. Sorry, they've done a new residential property, but they just knocked down an existing one, put a new one on there. Weren't aware they had to pay GST on that when they sold it. Nice little surprise when I thought they were making a good developer's profit.
Yeah, and look, that's a common scenario, especially even with substantial renovations. It's just being aware of your potential tax liabilities, and that's income tax and that's also GST. Stamp duty and land tax are other taxes to consider.
Payroll tax.
Payroll tax, exactly right. But there are some hidden taxes there that a lot of business owners and property developers overlook. Yep. And I suppose from our point of view, other areas of tax that we do, look, we do high-end stuff like tax consolidations, international tax. There are a few matters that would come across our desk. But the small business owners, it's predominantly the small business CGT concessions, property transactions, payroll tax, stamp duty and land tax.
Yeah.
Yep. And employee share schemes.
Yeah, it's good coverage. I think the other thing that I'm always aware of, you see people that come in and say, I haven't paid tax for a couple of years, and my immediate reaction is, well, you're either dodgy,
yeah.
or your business isn't performing, or there's something wrong there. It just, like if you've got a good functioning business, everyone's going to pay tax. So I don't think, to me, it's not a matter of not paying tax or avoiding tax. It's a matter of what's the timing. Gone are the days of offshore schemes and some of these things you've heard about and read about, but reality is a lot of it, and you attest to this, that it's about timing and about knowing when's the right time to take money out, when's the right time to actually do a transaction because you may qualify for one of these tests or something like that. So it keeps coming back to that plan, strategy and timing.
Exactly right. Timing is everything. So I think that's where the proactive business owners or proactive accountants out there seek specialist tax advice to make sure that timing is crucial.
Yep.
As I said, with this deal that we recently had that we saved them $400,000, if they consulted us previous, they wouldn't have. Luckily for them, they were able to restructure the deal. But if they weren't able to restructure the deal, they would have paid an extra $400,000
a lot of money.
tax. Yeah, exactly right. So timing is very crucial. It's a good point.
Yeah. So we've mentioned a few things where and we've given a few examples where there's some issues, but what are the common mistakes or oversights that you see, I guess, from a practitioner's point of view and someone that gets called in on our own clients and other firms' clients, from business owners when it comes to tax or strategy or lack thereof?
Yep. So, look, I think a big oversight for business owners is certainly exit strategy. You speak to a lot of business owners out there and say, look, what's your exit strategy? And they go, I don't have one. It's quite crucial to know what your exit strategy is. Are you going to sell the business? Are you going to pass it on to your kids? Are you going to list on the stock exchange? Because you've got to plan for the tax outcomes of that.
And I guess to add to that, and I always get told, don't go into something unless you've got an exit strategy.
Exactly right.
So the more they can get that up front, that tax planning starts way back when they're starting a business.
Exactly right. And as we talked about before, the small business CGT concessions, there's 4 concessions under those, and one of them is the 15-year exemption. And that to be eligible for that 15-year exemption, you've got to have planning. So with the exit strategy, it's quite important to have planning.
Yeah.
Not just at the last minute when the transaction's happening. You've got to plan throughout the years to make sure that you're eligible for these concessions. And the second one is tax structure. So many business owners out there set up their structure from day one, and that's it. They don't change it. So they're good at making their money, as we touched on before, but in terms of tax minimisation, the structure that they had 20 years ago might not be the correct structure today. So are the shareholders correct? If it's an individual shareholder of a company, that might not be the appropriate structure. If the trading company owns the assets, that might not be the appropriate structure for asset protection. Is succession planning being considered? So tax structuring is a general oversight that I see business owners and other advisors overlooking.
Yeah.
Yep.
And what we are referring to here is, again, I'll come back to good advice, good strategy, not schemes, not plots, not if it's too good to be true, it is. That's the reality of it. So it's using know-how, knowledge, and really the legislation framework to get the best outcome for a business owner.
Exactly right.
Yeah.
Yep.
That's good. So I guess we'll come back to that point around specialists. So you mentioned GP versus specialist. I think it's a good analogy. And I know your team works with plenty of other accountants, not just the PKF accountants, to support them. And I think I'll get your view on the world, but for me, you can't be everything to everyone. And to run a multi-specialist company can be quite expensive. Accountants are running businesses as well. they get in that day-to-day grind, it's hard for them to know everything and be able to service all their clients how they should. So I guess that's a good segue. How do you find that you work with these other accountants and their clients?
Yeah, look, we as you touched on there, we work with a lot of accounting firms around there to help them support their businesses. We've got, I think, maybe 8 offices around Australia, and we've got an international presence in 151 countries. So we work with a lot of accounting firms to provide technical advice, and we work in the back end. We don't these accounting firms that we deal with, they maintain the relationship with the client. We're here to support them, to provide that technical service that, as you said, they might not have the time or resources to provide. And look, as you know, business owners out there are limited for time, so they don't have the time to spend researching a tax advice question. That's where we come in. We come in and provide that correct advice so they don't have it.
But even on the research, if you're only seeing it once and you're researching and being certain of that outcome, that's hard and that's risky. Where if you're dealing with people that are dealing in this space all the time and having correspondence with the regulators and that sort of thing, makes it a lot more, easier process, because a lot more confidence in the outcome as well.
Exactly right. You don't want to. First of all, you don't want to advise your client of the wrong advice. You don't want to face a PI claim, and you don't want to spend time that's potentially unrecoverable. You want to focus on what you're doing, what you're good at doing, and that's being a business advisor to your client. You don't want to spend time researching a tax question that may or may not be correct, and it may or may not be the best outcome for the client. There may be other strategies that you can look at. As I said, we come in and we actually sit down with the advisor. There's some services out there where you can ask a question, but you may be the business owner, the accounting owner might be overlooking a particular strategy or maybe overlooking a particular tax. And that's where we come in. We sit down, we look at the books, and we say, look, okay, what's going on? What are you trying to achieve? And we advise accordingly. It's not, as I said, it's not just asking a particular question. We come and look at the facts and advise on the best possible outcome for the client.
Yeah, I think the key thing is it's not about who knows what or egos. It's how do we get the best outcome for the business owner.
Exactly.
And the proactive accountants or practitioners out there, I find, absolutely, bring them in. I've got the relationship, but I need some assistance. And I remember last year, some of our guys even did an advice on a restructure for an actual accounting firm. So this stuff is quite specialist, and it's important to get it right. So.
Yeah, exactly right. We work in the back end, and the accounting owner maintains a relationship with the client. It's good.
All right, I'm going to try and wrap this up. We've covered a lot of information, but and we've only probably just scratched the surface. To be fair, the tax legislation in Australia is very complex and sometimes conflicting, and you need to get the right advice. I think that's the key thing. Things I just noticed there. Your team's a specialist team. It's not about being the day-to-day, and getting your tax done is that day-to-day. It's ticking a box. Having a tax strategy, getting good tax advice, a plan and timing, is really important for a business owner to, one, achieve their goals, make sure their business strategy is achieved, aligning with more cash flow, creating wealth,
yes.
And also that one I love to hear you say, wealth extraction.
Yep.
It's not accounts. Sounds a bit dirty, doesn't it? But I think from there, it's really some of the key, as you mentioned, small business CGT concessions, and that's one that is all about timing and making sure your structure's right. General structuring around asset protection is a key one, to make sure that not only you're creating it, you're minimising your tax, but you're also protecting your assets, which does align to the tax compensation. Division 7A comes up all the time. If you've got a loan owing to your business, well, you really need to think about, is it being treated effectively, because you could get a nasty surprise. Employee share plans, restructuring, especially around succession or exits. I love that. What is your exit, and how does your tax strategy align to that? Yep. These are all things that you should just be asking questions. If your accountant doesn't know, it should be encouraged to say, well, I need some additional advice. And some of the other things around international tax, payroll tax, one that we see all the time, stamp duty, and land tax. They're probably some of the key ones to all come into tax strategy that many people don't even think about, because they just roll because it's not getting your tax done, I guess. Then we mentioned about some of the common mistakes and oversights, but rather than going to every one, I think we just reiterate, if you get the right advice and your timing's right, or even if you don't think it might be right and you go back and look at some things, there can be hundreds of thousands, if not millions of dollars saved from some of the transactions we see all the time. So we're not just talking theory here, we're not just talking a cost, we're talking real savings that can contribute towards lifestyle and family outcomes for business owners. Yep. And the last one there that I think it's, working with other advisors. It's not about knowing everything and being everything to everyone. It's how do we get the best advice with the best people to get the best outcome for your client. So, pretty good snapshot. Anything else to add around that whole tax conversation?
Look, as you said, there's a lot more to it, but I think you nailed it on the head. We're here to support business owners and other accountants out there who may not have the time and resources to do that tax speciality.
Yeah. So I'd reiterate to any business owner, as we've said with all these videos, have a plan, watch your strategy, because these are key things good businesses do to get a better outcome. If you haven't done that, you haven't sat down with your advisor, there's a start. In addition to that, if you need support, challenge the advisor to seek that specialist out. But it is a massive part of being a business owner. It's a massive part of being Australian, I guess, with a tax strategy. But it's a very important part that can make or break some businesses or your future plans. So hopefully you got a bit more out of this down to business. Dan, thanks for joining me. And till next time. Cheers.